Hello, my name is Jack Martin, and I will be presenting a analysis and forecast for Hannon Armstrong Sustainable Infrastructure Capital, or HASI. As the name suggests, HASI deals with investing and lending for green infrastructure projects, and their investment thesis is that they will earn better risk-adjusted returns by investing on the right side of the climate change line, lining themselves up for better long-term gains. To start, we're going to look at the key markets that HASI divides its projects into, and these come into three main sections: behind the meter, grid connected, and fuels, transport, and nature. As you can see at the bottom, HASI manages over 14 billion in total assets, and through their projects, they avoid over 8 million metric tons of carbon dioxide, as well as having over 40 years of experience, putting them at the top of the field in this sector. If you look to the right, you'll see that the breakdown of their portfolio is almost 50% in behind the meter projects, 38% in grid connected, and 13% allocated to fuels, transport, and nature projects. If you look in the graphic, you can see that HASI specifies within these three key markets different areas in which their projects deal. Moving into key metrics, as of June 25th, 2025, Hossi's stock was trading at a price of around $26.50 with a PE ratio as well as 26. Their quick ratio is 10.45, which is quite high for this sector, which means they have a lot of current assets able to cover their obligations. Their debt equity ratio is 1.95, and their profit margin is 35.23%, which is also quite high for the sector they're in. They have 120.71 million outstanding shares, and they operate a market cap of 3.2 billion. If you look in the upper right, that is overview of HASI's stock price from 2020 to 2025. Given that we're going to be analyzing the years 2020 to 2024, you can see that they performed very well through 2020, 2021, and then in 2022 their performance started decreasing, and you can see that right now HASI is trading well below its high of around $65-$70. Moving into financial trends, looking at 2020 to 2024, on the left, you can see a comparison of total return from HASI's stock, the S&P 500, and the ALPS Clean Energy ETF, which serves as an approximation for the sector that HASI operates within. Uh, you can see starting in 2020, both the clean energy ETF as well as HASI were trading well above the S&P 500 price. And once we move into 2022, you see that it falls below and then struggles to return to the levels it reached prior to 2020 and 2021. Looking at the net profit margins, we see that this follows a similar trend where there's high margins in 2020, 2021, and we see a sharp decline over 50% in 2022. Here, as opposed to the returns from the stock price, we see that HASI actually does jump up relatively close to the profit margins prior to 2022. But in 2024, we see them kind of flatten off again. Continuing with financial trends, we see that growth of sales and net income, as well as ROE and ROA, fall relatively in line with this trend that we discussed prior. We see that in 2022, net income falls below sales growth, and in 2023, there is a major rebound in terms of net income growth. In terms of ROE versus ROA, we see a very similar pattern arise. However, in 2022, we see a very sharp decline in return on equity, and that is understandable because HASI is a borrower and lender. They're very sensitive to interest rate changes, and ROE is going to be a big driving factor of their profit and productivity. So this decrease is explainable, and we see that there is very much a rebound in 2023 and 2024 in terms of return on equity. It actually rises a little bit higher than it was in 2021. Moving into risk factors, we can look at four main factors that have the potential to impact HASI's operations. The first being interest rates and market conditions. And HASI is very sensitive to this because as their financing and borrowing practices at a very large scale, they're very sensitive to volatile or high interest rates, and that directly impacts the profitability of their investments. Government policy dependency is also very important, seen as they are dealing in the clean energy sector. There's a lot of incentives or subsidies that are very impactful on their profitability, and that can be seen in the income tax provision within their financial statements. That is a very large depender on how their performance changes throughout years. If we look at, remember the stock price chart, uh, large reason that both the ETF and HASI stock were trading well above the S&P 500 in 2021 is because of government policy and overall market sentiment surrounding clean energy. Third, credit risk is inherently a part of lending, and while this may not come to fruition that often and cause major detriments, it is always an inherent risk that HASI is taking on in their projects. Finally, and most relevant recently, is commodity prices, especially with uncertainty surrounding tariffs. It has the potential to greatly affect HASI's projects and investments. So moving past struggles, what happened in 2022 and how is HASI moving forward to try to avoid the poor performance that they saw then in the future? So in 2022, these high volatile interest rates sharply increased borrowing costs for HASI and reduced net investment margins and in turn profitability. So margins and efficiency dropped, net profit margin almost halved, as we discussed earlier, and ROE fell below 1% and ROE to around 2.5%, which is quite low for an investment firm. So moving forward, in order to combat this, HASI shifted towards fixed rate debt and hedging to stabilize their funding costs. So their fixed rate borrowings rose to around 92% by the end of 2023, which is going to reduce their sensitivity to higher volatile interest rates. As well as strategic refinancing, they issued 700 million in green bonds in order to replace this higher cost debt, further reducing their exposure to interest rates. So both refinancing and shift towards fixed rate financing, as I commented on, provide future insurance against these market conditions that we saw cause a large amount of this poor performance in 2022. Finally, we're going to look at an investment forecast for HASI. HASI's major strengths are their diversified portfolio that reduces their exposure to shocks in any one of their markets that they deal in, as well as continued government policy alignment. While this is a little uncertain given this current administration, I do believe that there is long-term demand and incentive potential from both the public and the government in terms of clean energy and especially clean energy infrastructure. Overall, company performance is improving post 2022, as we saw from the financial trends. And personally, I believe long term in a future of sustainable infrastructure, and lenders like HASI are a very big part of it. So, finally, the investment recommendation would be to buy now at the relatively low price and hold medium to long term. Based on manager sentiment from their most recent 10K, I would suggest to evaluate in 2030 in 5 years based on the performance of these long-term projects that the managers have commented that may take a while to actually return profits or revenue to the firm. Thank you.